What's up, everybody? How you guys doing? Welcome to another episode of Market Watch. I'm Erik T. Jackson. That's Eddie Chinea. What's going on, my brother?
What's going on, man? Hey, Merry Christmas to you, man.
Yes,
How was your
sir.
Christmas?
Hey, it was good, man. Real
That's
good.
good. That's
Uh-huh.
good. Family, yeah, man. Kids get everything right. Santa Claus show up to everybody's house. You know what I mean? No
He
matter how
did.
rotten they are sometimes, you know what I mean? Still take care of them. It's still Christmas, you know what I mean?
Yep, yep,
So,
yep. They got most of what they wanted, but can't spoil them too much.
no, no, no. And keep in line. Tell them that dollar is worth something.
Absolutely, absolutely. So, uh, I'm gonna go over what we are again. Our show, Market Watch, is a financial show where we deal with the stock market. We talk financial news. We talk retirement, estate planning, uh, all things in that scope. And so, if that's something that you guys want to know about, we have plenty of videos and plenty of topics to come. So please stay tuned. Keep watching the show.
Yes,
I'm
sir.
sure you'll get great value out of it. Uh, like the videos, share the videos with like-minded family and friends. It helps the algorithm, and Eddie and I, it will allow us to affect more people. Because that's the goal with this show.
People helping people, man. And
Yes,
teach
sir.
people the right way to do it. There is a way to do it. And when you don't know the way, you know which way, you seek help. You know what I mean?
Absolutely.
So my deal is, man, yeah, just continue to pass it forward and pay it forward to somebody else that might need it. We try to put the content in a way that's very easy to understand because I know a lot of people, especially some of my clients, they're like, man, all that jargon, Eddie, just tell me what I need to do and explain it to me. So we try to give you guys the content in a simplified
Absolutely.
format to understand.
Absolutely. And you are a very trustworthy guy. That's why they can say that, because
Appreciate
they,
that.
they, they
I
trust
appreciate
you.
that.
Yes, sir. So today's episode will run through what you've learned, what you've done in 2022, and try and see how we can take it into 2023 and beyond. Right. So we'll look at different things. All right. So let's get started. So Eddie, you had a post on your EightOne Capital Facebook page, and
Mhm.
I would ask all of you guys to go to that page because he has great content all the time. And it was this topic, like moving from 22 into 23, and how to navigate that and make 2023 better. And so let's talk about a couple of or a few things that was on that post. So let's start talking about assets and debts. And so when you close out one year, talk to me, when you close out one year, going into another year, uh, is it more important to, uh, you know, uh, get more debt so you can write it off, or less debt, so your taxes, some kind of way it benefits you tax wise? What's up with that?
All right. So when you're talking about closing out the end of the year, right? So for
Yes,
one,
sir.
start getting your stuff together for your taxes, right? You're gonna have tax planning that's coming up. I am no tax professional, but everybody knows you got income tax that are coming up. You're gonna have to,
Mhm.
file your taxes, right?
Yeah.
Start getting some of those things together, right? So when it comes to your assets, when it comes to debt issues, what you're really looking for is there, are there contributions that you could be making that that you can take advantage of going into the end of the year, right? So
Okay.
make that final to making sure you maximize your contribution. So for something like a traditional IRA or Roth IRA, you have $6,000 a year, right?
Okay.
So if there's room there at the end of the year, you got a bonus or there's room to maximize it, then it's something you can think about, right?
Yeah.
And then you also, I mean, as far as your debt, we'll talk more losses, right? So something like tax loss harvesting, where if you can write off some of your losses, right, and then you can carry that amount forward if you don't use it all. Well, anyway, there's limits to all that stuff, but things like that people can kind of take into the new year as long as it's done before the last day, right? So the last market day.
Oh, okay. Okay. So when we're talking about investment losses, Uh,
Right.
so we're talking about unrealized losses.
Right. So I mean, you just you got realized, you have unrealized.
Okay.
Realized means, hey, you know what, I bought it and I sold it at a higher price, and I realized those gains, or you bought it, you sold it at a lower price, you realize those losses. Well,
Okay.
if you hadn't sold or bought, you know, uh, it's going to stay there as an unrealized loss. So what you can do with tax loss harvesting is write off. Let's just say you had $3,000 in losses.
Okay.
Right, very basic example, but if you had a way to offset that, right? And you can go against your ordinary income. So
Okay.
if you made, we'll just say, an extra $1,000 this year, well, you also had 3,000 losses, you
Yeah.
know, looking at minimum, required distributions for people that are reaching, 72 or older.
Mm-hmm.
Another way to do it, right? So people that are uh, already retired and they are taking their required minimum distributions. A lot of times you can take that, you can kind of aggregate it, right? So you can put it all together.
Yeah.
There's rules for everything. So I
Right.
think this is, a one-stop shop
Right.
right now, but just understanding, what goes with that, when you have to take those, the rules between that and something that's going to be like an inherited IRA.
Mm-hmm.
So you can't aggregate those with traditional IRA. I mean, there's so many rules when it comes to that.
But
But
let's,
some, things like that, finding a way to, hey, you know what, if I can take, the loss and I can write it off, well,
yeah.
I'll write it off. But again, with that comes a slew of other things also, you know.
So, so with investment losses, what's the highest you can write off in a year? Is it
3,000.
3,000?
That's it. Yeah.
Okay. So if you have 10,000 in investment losses, can you
You
write it
carry
off
that
and
over.
you can carry it over?
Yeah, you carry that forward.
Absolutely.
Right. But
Absolutely.
again, it's still only 3,000 a year. You know what I mean?
Right. You can
So
carry it.
if the next year would be good, if you did not have any losses, let's say the market rebounds and everybody's up 20%, you have, any losses,
Hmm.
well, then yes, then it helps, for that year if you needed to write something off.
Yeah.
Again, it's a max of $3,000 a year. And again, there are so many other rules and other bits of information to think about before doing that. But again, it's just a way for people like, hey, it's the wrapping up the end of the year, getting together, all my information I'm gonna need for my taxes, what
Right.
can I write off, what can I not write off?
Right.
Um, how are my investments doing going into the new year? What's to come? What are the next 3 months, 6 months, 9 months looking like? So
Okay.
things like that you can keep in mind to try to prepare for the upcoming year.
Yeah. So what about uh buying or selling a home at the end of the year? Like, is that smart? Is it not smart? What do we do?
I mean, if you're buying a home, I mean, it's an asset purchase. You know what I mean? It's no different than saying, hey, you know what? I'm buying whatever stock because it's beaten up right now and the
Hmm.
price is, looking real. So it's really no different. I mean, obviously, it's long term. Uh, I would say looking at depending on what rates are. Again, I know
Hmm.
what my current rate is, and I'm not refinancing. I'm not purchasing another home. Nothing. I'm keeping this rate
Okay.
until I pay this thing off. You know what I mean?
Yep.
But as far as selling a house, I figure if you're probably selling a house, and maybe you're also going to have to buy one, if you can do it before the start of the new year, so you can claim your homestead tax exemption.
Okay.
You know what I mean? You don't have to pay capital or tax on the capital gains from the sale of your primary home, so that helps also. So I don't
Okay.
think it's a terrible thing. You know what I mean?
Yeah. Yeah. So if it's your primary home, you don't have to pay capital gains taxes on it.
As
Is that
far
what you
unless
just
they change that rule.
okay. No, I mean that's good. I didn't know that. I know when we sold my dad's home, we had to pay taxes on it, but I guess because it wasn't our primary residence.
Correct.
Okay. All right, that makes
So you
sense.
can exclude up to 250,000 of it is what it is.
Okay. Okay.
Right. So if you're married and you're filing jointly, it's
Mhm.
500,000. So if, I owe nothing on my house and I sell it for 500,000.
Mhm.
There you go.
Yeah.
I'll have
Yeah.
to pay capital
Oh,
gains
okay.
tax on it.
Okay. 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 Uh, so uh assets, uh assets and debts, anything else there? Or
No,
did we
I mean,
cover
some
everything?
of the other things on the financial planning side, just,
Hmm.
start looking at some of the things like your cash flow, right? And
Hmm.
now, to do a little cash flow analysis, see what you have coming in, right? What's coming in, what's going out,
Yeah.
things like that that are going to help you to realize, hey, what are things that I can change going into this new year? Are the
Okay.
things that I can, debts that I can get rid of, right? Can we pay off this credit card? I know it's the holidays, things happen,
Right.
right? So there are little things like that that we can pay off, and assess
Yeah.
our financial situation from a,
Yeah.
again, that short-term mindset leading up
Yeah.
to what ultimately you're trying to build up to. So looking at, again, cash flow, debt, right? Your insurance needs. You have anything
Hmm.
else like that? Because again, insurance, right? Think about an
Hmm.
asset, right? Life
Right.
insurance, things like that. Any HSA accounts, right? Flex accounts. So
Okay.
things to start keeping in mind as you go into, especially now the end of the year. And I know
Yeah.
we're down to the last 4 days. So if you want anything done, you better get it done quick because people are not in a
Absolutely.
rush to do anything right now. So,
Absolutely. Uh, so with let's talk tax planning.
yeah.
Okay. Let's talk tax planning. So uh with that, what does that entail heading into a new year?
All right. So like when I started off with, and maybe I got, I put the carriage in front of the horse,
Okay.
but to make any contributions, right? So are there any other Roth IRA contributions you can make, right? 401k contributions,
Hmm.
right, that you can use. And again, because those are all pre-tax,
Yeah.
you're contributing to a pre-tax, you know, you get to write that off at the end of the year. So anything that they're offering, your employer's offering, if you can take advantage of that, that's one thing. Again, looking at, gathering receipts if you have write-offs, right? So you start, itemizing things that you're going to be writing off, getting that stuff together, right? So if you could contribute to your church, right, weekly, they should be sending you a statement. If not, just things like that to get together and look at, hey, we got to plan going into for the following year, especially if like, hey, we
Yeah.
just got a raise, right? So we're about to
Yeah.
go up to the next income tax bracket. Well, if that happens, you got to want to be prepared for that, right? So what are the things you can
Right.
do when that happens?
Yeah. So those are just strategies to minimize your tax liability, basically.
Yeah, just trying to minimize again exactly what everybody worked hard for God. I'm not telling anybody to do anything that is illegal, but if they're allowing you to say contribute $6,000 pre-tax, well then
Yeah.
a dollar today is worth more than a dollar 10 years from now. You know what I mean?
Absolutely. Yeah.
And if you put it away tax free, well, man, now you know what I mean. You're winning. And again, if it will also bring down, your income for the year, right? So if you're on that threshold of a tax bracket,
Hmm.
and I'm right at, we'll just say, 174,000, so
Hmm.
170,000.
Yeah.
I'm at, what is that? I think 24%,
Yeah.
something like that.
Something like that. Yeah.
Yeah. So right after that, you're talking about being at 32%. You know what I mean? So
Right.
make these contributions. Well, that's a way to plan, especially going new year. Right. You have other things too, right? You have a baby on the way, right? You just had a baby, right? Baby's turning a year old, or now you're having to pay for daycare, whatever the case is, just
Yeah.
things you can take care of now, right? To kind of trying to prepare you and see what tax credits you qualify for, because there's plenty of them out there.
Yeah. Yeah. Okay. Okay. So uh when tax planning, let's say you have you get a new job midway, like in January, and it's making an extra 20 G's. So you go from making maybe 60 G's to making 80 G's. I mean, is there something you can do uh to uh alleviate that tax hit, maybe?
Yeah. So with a 401, like say the employee that you're with, offers a 401k.
Hmm.
So you think about a 401k and what the limits are to be able to contribute to that, right?
Yeah.
So with it, I think it's something like 20 or going to 2023, it's going to be 22,500 that you're allowed to put up, right?
Okay.
Limit on employees elected deferrals.
Okay.
You put that away. Well, let's just say they're going to, match you, 6% dollar for dollar for the, or whatever it is, dollar for dollar for the first 6%. Anyway, besides the point, all I know is that you can take that, you can make that 20 grand increase,
Yeah.
go to work for you and make it so that you don't even see it really. You know what I mean?
That's what I'm talking about. How can they do that?
Yeah, if there's a 401k, that's what I'm saying. 401k allows you, you know what I mean, up to almost 23,000,
Oh,
$22,500 that you
absolutely.
can
Yeah,
contribute to. Right.
absolutely.
So if they had that, man, that's for sure one, right? So I'm starting in January. I know I'm making 20 grand more.
Yeah,
I can continue living off the 60 I was making because I was
yeah,
living fine.
yeah,
Let me take this and put it to work myself.
absolutely. Absolutely. Uh any tax strategies for our small business owners? Uh
And make sure you keep your receipts, right? When you're filing all your paperwork, make sure you're organized and everything, because I promise you, I mean, if you've never been audited, good for you, but don't be surprised if you do as a business owner. So make sure all your stuff is in line, right?
mhm.
So anything that you've spent uh, on the business, right? So if you have internet at your house, or whatever it is that you find your tax professional or your
Yeah,
accountant,
Yeah.
They do it. They should be able to tell you some of the things that you're able to write off. Again, I by no means I have an accountant that I use. I am
Hmm.
not a tax professional,
Yeah.
uh, but I do know that there are ways you can as far as small businesses and things we can take advantage of. Uh,
Right.
that what the money we're putting out to make money for our business.
Yeah.
What I mean? And find
So
those things that you're allowed, mileage and things of that sort.
right. So let me get your opinion on this because it's been on the news a few times. It seems like when the government made it like super duper easy to get these PPP loans, right? Like it was like people was getting them like left and right.
Yeah.
But now the government coming back to all these businesses, sending people to jail, getting their money back. I mean, was that just now? This is the conspiracy theorist in me. Was that just a plot to get like certain people, man? Like, what's your thought on that?
And
That's
I
the
don't know if it's because they're trying to necessarily go after and get people, but I know that there are people they probably should be going after because I'm sure there were people that were getting these things. I know because I listened to it on CNBC one night. I was listening
yeah,
to whatever show it was, and they were talking about, God, I want to say Romanian something, but these people are still on the run. And they got away by taking away like $5 million worth of PPP loans.
and they left the country
Gone. Can't find them.
out of there. Yeah,
Yep.
yeah,
So, I mean, maybe it is a gotcha. I don't know. I know that if I can make it without having to take a loan, I'm gonna make it for as
yeah,
long as I can.
yeah.
I obviously didn't need to worry about that because we opened up January 25th of this year. Matter of
Already.
fact, coming up on the 1 year anniversary, man. I'm super excited about that.
Yes, sir. Congratulations on that, man.
Appreciate it,
That
man.
yeah, that's a definite milestone, brother.
It's not,
Let's
look, it's been a lot of work. It hasn't been easy, but still going to be a lot of work to come.
a labor of love, huh?
Hey man, if you're gonna do it right. I mean, the same way I became a student of the game when it came to coaching football and working to
Yeah,
becoming a head coach. And
yeah,
I mean, I can do that same thing, put that same emphasis, that same desire, that same passion to learn into something
absolutely,
else that that fuels my fire, man. So it's
absolutely.
always good.
Now let's look at insurance planning.
Hmm.
Let's take a look at that. Um, so going into the new year, so there's what should a family look to do insurance wise?
So for one, making sure, hey, do you have health insurance? Is that stuff set up right? Or you're about to have a baby? You know what I mean?
Yeah.
So making sure that you're prepared to add that baby to the insurance and see how that affects, what I mean, what they're charging you, per pay period. Check to see if you have any balances left over in like your FSA accounts, right? Your flex
Yep.
spending accounts.
Yep. Flexible spending.
Sometimes companies will allow up to like $570 of unused FSA funds to
Okay.
roll over to the following year.
Hmm.
So that's something you have to check with your own, with your business, your company, whoever you're with.
Hmm.
A lot of times they'll allow you to submit receipts also 90 days
Hmm.
from the previous year. So if you need to do that, you can do
Okay.
that. So make sure again, did you meet your health insurance deductible if you have a deductible? Did you, there are certain write-offs you can get as far as spending so much of your, I don't know if it's AGI or adjusted gross income,
Uh-huh.
uh, but or if you spend so much on medical bills, right? So that's something else you
Yeah.
can kind of look at.
Okay.
And then life insurance planning, it's grim and nobody ever likes to talk about it, but unfortunately, it's one of the, the one thing we're talking about is taxes. The other thing that's guaranteed is death, and making
Absolutely.
sure you have enough coverage, right, to take care of your family.
Yeah, man.
Because I tell you, man, I was just doing some reading and looking at, TRS and what happens if, God forbid I'm, were to pass or you were to pass, right? What kind of benefit? What happens to the money that I've contributed that has earned interest and everything? What happens to that money?
Right.
One, looking at there that they do a good job of member death benefits. So as an
Okay.
active member,
Yeah.
so that's pretty good. But keeping up on things like that, right? So God forbid, again, I ain't trying to be grim on, it's the holidays, it's a new year, but you know what I'm saying? Just, God forbid, I think about if I were to pass, where how does that set my family up?
Right.
And I've always
Right.
made it the point, learn from my dad, man, to make sure that you have at least enough minimum to pay off the house so they don't have to worry about paying for the house anymore.
Absolutely.
Right. So, and then, we've adjusted from there, man. And, there's good policies, good companies that do it. Matter of fact, I have a friend of mine who's with New York Life. He was actually an O-line coach with me when we
Uh-huh.
coached at Pearland. Yeah. So anyway, that's why I got my life insurance policy through, man. And I mean, I mean, I like the rate that I'm paying. You know what I mean? You don't
Yeah.
have to go out and get $1 million policy. I'm not telling anybody to do that, right? But just take into account, all the costs that go into, your month to month costs, and then multiply that by 12, and then by however many years.
Okay.
So
Okay. So
kind of
so
think about how long you want them taken care of.
as a divorced father, uh and my ex stepped to me and said she would like me to take out or she would like to take out on me a whole uh not a whole life but a term policy until my youngest is 18.
Hmm.
uh I have three kids, right? So what I mean, what is the amount? I mean, should I take out enough to pay off her house or enough to? Because I don't know.
Okay, so again, this I'm not getting involved in nobody's drama,
For
right?
sure, for sure.
But what I'm saying is, if she's going to take one out, you need to just go. I mean, I would advise you to go get your own life insurance policy and make
Hmm.
sure that there's enough there to make sure that the kids are taken care of.
Hmm.
If you wanted to take it out and say, "Hey, I just want to know that if God forbid I pass," and
For
you're
sure.
willing to make that as part of your planning to say, "Hey, I want to at least be able to pay off the mother of my children's home so that she doesn't have
Right,
to worry about that having to raise kids on her own." You know what I mean?
right.
So yeah, I mean I think that is a very stand up thing to do.
That was my
Easy
thought.
to be
Yeah.
bitter. You know what I mean? It's easy to
Right,
be bitter. I can
right,
understand that,
right.
but nonetheless, I think that it's something that you got to think about. You know what I mean? People don't think about those things. So when you
Yeah,
think like, oh, insurance planning for next year,
for
what do
sure.
I think? Well, God forbid something happens.
Right,
What is that you're looking to do, and how do you want
right.
your family to be able to move on?
Absolutely. So now, what about health insurance? I want to take it like so where I am, it's pretty expensive for a family's health. So I imagine like just hearing it probably is a lot of different places. So let's take someone that is retired. Like where can they go to get inexpensive, I guess maybe relatively uh expensive health insurance, or what can they do for the new year?
Oh man, I mean, for one, if you qualify for Medicare, I say get signed up, right, and get the benefits that you should be due.
Hmm.
And then as far as, I mean, I would say speak to somebody that sells insurance, man. I have a couple of people that I know, like I said, a good friend of mine that I can recommend to people. I have no problem doing that.
Okay.
But talk to somebody there. And I know, people, sometimes they come off with a bad notion, right? Oh, this insurance salesman. I promise you that the person I'm talking about is going to do great business with you. I mean, he did it by me. I trust that dude.
Yeah.
Uh, but jump on and with somebody like that and say, hey man, what can I do about a health insurance policy? How much it's going to cost? Right.
Yeah.
And then something else that people got to think of, once you're already retired, like, hey, when you can no longer do it by yourself, man, what are going to be your annual living costs? Right. If you have to go to, a senior facility.
Absolutely.
All right, so start thinking about things like that. Like, hey, after a while, you're just like, hey, I don't want to have to cut the grass anymore. I'm 72 years old. I don't want to have
Yep.
to do these things. I'll just go here, man. You know what I mean? There's people my age. It's an adult living community, right? You know what I mean?
Yep. Yep.
But it costs
Yep.
money, and people don't think about that. They just think, hey, you
Right.
retire. No, you're just getting taken care of the rest of your life. That ain't how it works.
At
You
all.
get Social Security, you know what I mean? So,
Yeah. Yeah.
but
Okay.
any kind of HSAs, making sure that, you know what I mean, that people have these health savings accounts.
Yeah.
So they have contribution limits that are going up, right,
Okay.
significantly this year.
Okay.
Um, it says here the annual inflation adjusted limit on HSA contributions for self-only coverage will be $3,850, up from $3,650 from this
Yeah.
past year.
Okay.
So family coverage up will be $7,750, up from $7,300. So as far as family, so if you have it, an HSA account,
Okay.
and look and see, when you have to spend that money by, and
Yep.
it's one of those use it or lose it. But there are plenty of things, man. I don't think people realize the amount of things you can write off not write off, but you can use with these HSA accounts.
Right.
I was looking at like football equipment, like things that I could buy for my son that, it's going to protect their health, and
Yeah.
that you can buy.
Yeah.
So make sure you guys look into your plans.
Absolutely. Okay, big dog. Uh, let's pivot to cash flow. Uh,
Yeah.
what do we need to know about that for the new year?
Yeah, so going into the new year, right? So some of your cash flow issues, right? So let's look at your income, right? All the money that comes in, all the money that goes out, right? And your expenses.
Yeah.
Right? Try to review your cash flow plan. Um, is there anything that happened, the past year or that you expect to materially change this coming year, right, to your household income, right? So you're about to have a new baby. You're about to have a baby and your wife decides, that she doesn't want to work. So, right, she wants to stay home with the baby, things like that, right? So anything like that, it's going to affect how much money's coming in, right? Whether
Yeah.
that increases or decreases and how much money's going out and being able to adjust from there. Any employee benefits, right? Make sure you're taking advantage of what your employers are offering, contributing to an IRA if you're eligible. So just, things like that when talking about how much money's coming in, how much
Yeah.
money's coming out, and taking a look at that and being able to, adjust and pivot and say, all right, hey, look, we're about to get this raise and, starting in January, what are we going to do with our, with that money?
Okay. Okay. So uh that also entails, I guess, debts, which debts are you going to pay off, what's most important, what's least important, things like that.
Right. And with people, people lose jobs all the time, right? So this is a rough year, right? So, maybe you had to, withdraw from your emergency fund, right? So do you need to replenish, right? Or adjust your emergency fund? Can you increase what you're putting away for your emergency fund or, or did
Okay.
you have to pull from it? You know what I mean? And now you have to
Yeah.
replenish that to make sure you've got, ideally I tell people 6 months worth of bills saved in
Hmm.
an emergency fund.
Yeah.
You can do that at least. It gives you 6 months to find a job.
Yeah. So this
Uh,
is so this is the season to make those type of decisions, like how should you decrease or increase the amount you're putting into maybe this account, that account, this retirement. Like, I guess from October, November, and December, the last quarter of the year is the time when you want to make those decisions heading into the new year.
Yeah, I mean, you want to prepare, you know what I mean, have a plan in place. So, when the new year hits, right, this is our new plan of attack, right? Either we're
Hmm.
going to modify a little bit or last year was very good.
Hmm.
We stuck to the plan and we're going to continue going, right? So some of these things may not even pertain to you, right?
Yeah.
So,
Yeah.
sometimes people think about, having funds left over, like I said before, in an FSA account, making sure that you need to, are you adequately saving towards your goals, right? That ideal future state that you're looking for when you retire.
Yeah.
Right. It's not, again, I know with Christmas and kids and everything, sometimes it seems so far off, but I promise you, it's going to creep up on you. And before you know it, you'll be like, oh my gosh, like I'm 57, 58. I ain't got but 7 years left for, you know.
That's right. That's right.
And hopefully you can do it before then. That'd be even great if you know what I mean. If you do it before then.
Yeah. Yeah. It gets
So
real. I thought I was a late bloomer as far as saving and investing and doing all those things that grown-ups do.
yeah, yeah,
But
yeah.
I feel like I'm in a good spot though. I'm not
Look,
50
I can
yet,
play.
and yeah,
Yeah,
yeah, I feel
yeah.
like I'm in a good spot even though I thought I started late. So it's
It's
never
never too late. Never ever too
already
late. Yeah, you know
already.
what I mean. So some of
Yeah.
the other things, man, if you make annual gifts, right, that's something else that are you going to continue to make those annual gifts? Are you going to increase them, decrease them? Are do you have any homes, right, businesses that you're looking to sell this year coming up? Are you getting that much closer to retirement, right? So is your
Yep.
risk tolerance, your investment tolerance, right?
Yep.
Is that changing, right? Do you need to maybe decrease that? Which my dad is a all about let's go. We're aggressive and we're going to do, I mean, we're going to get it. And, so when I tell them like dad, hey, when you start getting, once you've done it, you know what I mean? Now it's time to, to preserve it, man. So, I mean, so I love him, my dad, my dad's the one that put me on, so I can't complain or anything like that.
Already.
But again, rebalancing your portfolios, right? Right. Have you checked in, how your portfolios invest, the performance that it had this past year
Yeah,
or this last quarter, right? Do you need to reallocate some of that stuff, right? Adjust your
absolutely.
allocation. So
Also, something that like my ex's parents, my ex in-laws, they took at least no less than 4 vacations a year,
hey
you know.
man, it's a beautiful
So
thing.
when you're retired, I guess it's fixed because when you're working, it can go up or down depending on switching jobs or not switching jobs. So when you're
Yeah,
retired, it's sort of fixed. So the only thing you have to worry about is overspending, you know?
yeah,
So
yeah.
So, that's something that you can take away from. You take 4 vacations a year, maybe you two this time. You know what I'm saying? You can fluctuate the vacations, you know what I'm
Oh,
saying,
there's
in order
yes,
to
there's plenty of ways to do it, man.
to
To
make it
cut
work.
costs, man. You know what I mean? If you really want to do it, there's ways to do it. You just got to
Yeah,
be willing to sacrifice.
absolutely.
And I'm a big proponent of pay yourself first. You work hard for your money.
Yeah,
You know what I mean? I never tell anybody like, yo, no, don't go buy something for yourself. Just save, save, save. Pay yourself first,
yeah,
but do so, you know what I mean, with the end goal in mind. You know what I mean?
absolutely.
Like I want a sports car. I'm not just gonna go and buy a Lamborghini. Can I get finance for a Lamborghini? Yeah, I probably will get finance for a Lamborghini, but I'm not buying a damn Lamborghini. There's no reason for that. I can wait. You know what I mean? That stuff will come down the
Absolutely.
line, right?
Absolutely.
All right.
I guarantee, this is wild to me because it just seems like when you don't need something, stuff tends to happen badly. Like maybe a teacher, maybe someone with a small business can afford a Lamborghini, but I guarantee you, if you got it, somebody would jack it from you. But one of the big NBA players or NFL, they could get a Lamborghini and they'll be good. They Lamborghini safe and nobody mess with it. It's just crazy how life works like that. That's God telling you didn't need to get that Lamborghini.
Yeah, you know what I mean? Told you not to get it. Gave you every sign I could. Sometimes you gotta learn the hard way. But yeah, that
Absolutely.
stuff's down the line, man. I don't even want a Lamborghini, man.
Hey,
I want a flat in New York that I can fly to whenever I want. I want a
absolutely.
flat on the West Coast. You know what I mean? I want a
Yeah.
vacation home in Colorado. That's what I want. You know what I mean? And
That's
try.
great.
Yeah,
I
man.
don't even I don't even know what I want yet, but now that's great that you know.
Yeah,
Hopefully I'll know in time, but I don't know yet. But that's awesome. Estate planning, my brother. Um,
yeah, man.
l- Talk to me about that heading into 2023.
So again, not trying to be grim, but you know, I mean, I took some notes. I want you guys to hear some of the stuff because I just did it for my parents. All right, so started helping them with their estate planning.
Hmm.
Are certain things to keep in mind. A lot of things we've kind of already talked about. You know what I mean? We talked about having insurance. You know what I mean? Making sure that you're
Okay.
checking up on life insurance, health insurance, things of that sort. Uh, Understand like making sure you have beneficiaries on everything.
Yeah.
Right. That is huge. So God forbid, right? Sometimes things happen in life. God forbid anything happens. Do you have beneficiaries there? So we're trying to keep as much of this stuff out of probate as possible, right? So
Hmm. Hmm.
going to to court and having to have it all situated there. So a lot of financial accounts are going to do that anyway, right? So investment accounts, retirement accounts, 401ks, things like that.
Yeah.
Uh, they do a transfer on death, right? So certain places you have to look. Like when I did it for my parents, there's certain deeds, and they call it something different everywhere else. But just
Hmm.
understandable that, right? So if it's payable on death, POD, payable on death, just means that your beneficiaries automatically become the account owners, right? So it skips probate.
Yeah.
You know what I mean? So making sure
Hmm.
that it's a payable on death. Like when I pass, I want, my wife to get it or my kids are going to get it, right?
Yeah.
Split up equally however they want to do it.
Yeah.
So that's one thing. All right. So making sure you have beneficiaries on everything. Everything. You know what I mean?
Yeah.
Going into the new year again, right? So durable power of attorney, right? Living will, right? Any advanced medical directives, God forbid you pass away. Long-term care, right?
Hmm.
Is there anything, do you qualify for VA benefits, right? And if you do qualify for VA benefits, again, my dad is VA, right? Veteran. My older brother, veteran. My dad's brother and sister, both. So understand how, with long-term care where those VA benefits can come into play. God forbid that happens. And then
So you'll get those benefits no matter how long you were in one of the armed services. Like if you
as
just
far as
did a
I know,
4 year stint.
yeah, if you did a 4 year stint and you know what I mean, you get out, right, honorable discharge, and you get out and you go to the VA and they say, hey man, yeah, we're giving you 40% disability. Well,
Oh,
then
okay.
you're gonna collect that for the rest of your life.
Oh, okay.
All right. So they just gave an increase. I posted an article on the EightOne Capital Group about them increasing what veterans are getting. I'm all for it, man.
Yes, sir.
You know
Yes,
what I mean? Take
sir.
care of it, man. Those people fought for our freedoms and fought for people's freedoms in other parts of the world. You
That
know
they
what I
don't
mean?
even know. Yeah,
Right. They're
yeah,
over there fighting for their freedom, in
yeah.
Iraq for people to not have to live under persecution and stuff like that, man. So
Right.
shout out to any veterans, right? Soldiers. Appreciate what you guys do, especially you guys overseas. You know what I mean?
Yes,
Recognize them.
sir.
It's tough not to be home for the holidays. So appreciate what you
Definitely.
guys do.
Absolutely. Absolutely. Uh, so uh as far as estate planning goes, that's as about that's probably about all that
No, I mean, no. There's oh, dude. When it comes to estate planning, man. I read a book. It's called Estate Planning 101. It's a little
Okay.
white book, man. Anybody wants to read it, very easy read, and gave a lot of information, which is what I base, when I help my parents out. But understand, right? So, do I have in my living will, right?
Yeah.
Right? Do I have advanced medical directives like, hey, like when I pass, I don't very much. I don't want to live like a vegetable. You know what I mean? Things like that.
Yeah.
Uh, and then deciding, hey, do I want to put this stuff into a trust, right? So there's a whole other deal that comes with putting things into a trust.
Okay.
So you would have like revocable and irrevocable, where revocable means I can write whoever I want to trust, and I can take that person off and put somebody else on.
Yeah.
Right. So if my dad, puts the three of us right a revocable trust, and me and my brothers, all go crazy, and we leave the country and never hear from us again. Well,
Yeah.
then he could take it away and give it to somebody else, right? The grandkids.
Yeah.
If it's irrevocable, you better make sure that the person you're giving it to that you're okay with them getting it, because you can't take it back. You know what I mean?
And can you make it revocable? If you're still alive, can you change the irrevocable to vocable to
No,
revocable?
no,
Oh,
no.
okay.
Irrevocable. That's it. It's irrevocable. It means this is it. It's done. It's done.
Already. Already.
So, looking at any gifts that you can give, right? So people that are maybe they're retired and they're
Hmm.
looking, their kids just graduated, college, or he's getting married, and they're buying a house. And you want to be able to gift them, understanding what the limits are on that, right? So being able to give gifts without having to worry about gift taxes.
Yeah. Yeah.
So 2022 this year, I think the limit was 16,000.
Okay.
So. Uh, yeah, things like that you can think about, right? I'm going to give over, so much money to my children, or to a brother,
Absolutely.
or to, whoever, right?
Right.
So things like
Okay.
that, that will most certainly help when you start talking about preparing for the new year, making sure, again, do you have a will,
Yeah.
right? That stuff like that. That's easy. You can get wills done for $100 nowadays. Do you have beneficiaries on everything? Because that is huge, man. If you know what I mean, when it comes to financial accounts,
Yeah.
you're usually okay as long as you have beneficiaries. But man, you don't want things to have to go to probate and have to go to court.
Right. Right.
Wait,
You
all
know,
right. So look into, maybe a trust might be better for somebody.
hmm
Put everything in a trust, and it
hmm
gets paid out to the people that it's supposed to get paid out to.
Yeah. Yeah. Okay. Awesome. That's what it is. Good deal, man. So this was uh things that you can things that you ended 22 with that we're looking forward to doing bigger and better in 2023. Uh Assets and debt, tax planning, insurance planning, uh cash flow, and estate planning were the things that we'll discuss today. Uh Hopefully you got value out of that. Uh uh if you have any comments, questions, leave them in the comments section. We'll try our best to monitor that and answer as best we can. Uh, Thank you, Eddie. Next week we'll come back with another uh, book recommendations, book review.
Hey, yeah, there we go, man.
We'll do
Especially
that
something to
again.
read.
Yeah,
Read
man.
2023 book reading list, man. That'd be good.
Yes, sir. We're gonna do it like that. Uh, Appreciate it, man. This is the last show of 2022. What
Yeah,
do you think
man. The
about that,
last
man?
show of many shows to come, man. You know what I
Absolutely.
mean? This is good. Like I said, I like giving it back to the people, man. Understand?
Yeah.
We'll give it to you real. I said I'm gonna give it to you the way I would want to hear it, and it's we're talking about people that, yes, we're still working people. We're not.
Hmm.
Yes, I'm in the financial industry. I still teach. I still got kids to take to practice. You got kids, you know what I mean? So
Yeah.
it's
Yeah.
not somebody sitting from a Wall Street pedigree saying, "Oh, do this and you need to do that." And look, we're gonna keep it real with you.
You know, keep it real and keep it honest.
That's right.
And
Real honest.
already that's us. And this is Market Watch. And until 2023, guys,
Out, y'all. It's been a pleasure. Enjoy
yeah,
yourselves. Be safe, right? May the best of your todays be the worst of your tomorrows.
already
I mean, enjoy the new year.
Be safe.
Yes, sir.
Keywords. Be safe, man.
Yes, for
Uh,
sure.
and we will catch you next year.
Yeah, sounds crazy, but yeah, catch up boys next year. I'll talk to you next year, brother.
All right, brother.
Appreciate
Peace.
it, man. All
Yes,
right.
sir.